with me is the ABC's business editor, Peter Ryan. Peter, what's the decision?
Well, Kim, as expected, interest rates remain on hold at 4.75%. That's where they've been since November last year. So just judging by what the Reserve Bank has said in recent months, they are still waiting to see what fallout, if any, there will be from the deepening debt crisis emanating from Europe.
Well, while you take a quick glance at the Reserve Bank statement there, we can just repeat the news that interest rates are on hold for the 11th month in a row, the official rate at 4.75%. Peter, the Reserve Bank has been keeping an eye on the overseas troubles, particularly in the Eurozone, and inflation. Any sort of clues there as to what they're keeping an eye on this time?
Well, Kim, some of the initial comments are quite dovish once again, but they're saying that they view monetary policy at the moment to be prudent, which goes to the wait-and-see analogy. They say that financial conditions have been easing somewhat, and we've seen that on global share markets and also locally where the ASX 200 has fallen something like 20% over the past 6 months. So a wait-and-see approach, and that's in line with what most economists, or 22 economists polled by Reuters, were saying, that rates would remain on hold. But there are a few, including Westpac, AMP Capital Investors, Goldman Sachs, who believe that there will be a rate cut by the end of the year.
If you think of all of the global stock market volatility, and including here in Australia that we've seen in the last couple of months, all the uncertainty about the future of the Eurozone, it is interesting, isn't it, that monetary policy here in Australia remains on hold?
I think that the Reserve Bank, once again, as we've been saying months down the track this year, that the Reserve Bank is really concerned about inflation, higher commodity prices, what will eventually happen when resources boom Mark II hits. So they're having to manage the two-speed or the multi-speed economy to ensure that when the resources boom takes off, that inflation does not become a threat. But also we have seen money markets pointing towards interest rate cuts of around about 1.5% over the next year. The Reserve Bank has gone out on a limb to make the point that they believe that those forecasts might not be accurate for technical reasons, yet still money markets, for example, today believe that there was a 25% chance of a cut over the next year, or maybe even by the end of the year. So
now, while this decision today to leave interest rates on hold at 4.75% was widely anticipated, is it having any effect on the Australian dollar, for example?
The Australian dollar's remained pretty steady, Kim. It was just over 95 US cents, 95.1 US cents before the decision hit. It's pretty much the same, 95.12. It did fall below the 95 US cent threshold earlier this morning, but it made something of a recovery after some surprisingly strong news on the economic front here in Australia.
Finally, Peter Ryan, we've also seen some positive economic news here, as you've indicated, building approvals and also trade balance figures out today.
That's right. Building approvals for August rose substantially, well over 10%. Economists had only been forecasting an increase of 1%. The big one, though, was the trade balance. $3.1 billion of exports over the top of imports, and that's been driven by coal exports to India and China, and that really underpins the view that that demand is really going to be stimulating and underpinning the Australian economy for some time to come.
All right, ABC Business Editor Peter Ryan, thank you very much. Interest rates remain on hold at 4.75% for the 11th straight month. Could possibly be a change next month, but we'll wait and see.